This is Eric Muathe with Muathe.com for February 27th, 2020. We are seeing the market stage the fourth down day in a row, and right now the Dow down about 700 to 600 points, down about 2.5%. And we can see here from a visual perspective that for the week as of right now, give or take, the Dow has lost almost 2,800 points, 2,800 points, down about 9 to 10% for this week only. Now, if we take a look at the S&P 500, it is also equally down about 9% this week alone. Now, let me share with you some fundamentals here. Now, if you understand technical analysis or if you follow my work, there's something you don't want to do, which is try and catch cheap stocks, quote unquote, because they are oversold. And what that means is that as long as a stock is trading below 30.9 on its RSI, and here we are seeing the daily for the S&P 500, as long as it is below RSI 30.9, that is not where you want to try and go back and find some bounce, because that's not a good area. The only time that this becomes a good area to catch a bounce or a potential bounce is when and if it finally comes off that area. In other words, after it moves back above the 30.9 threshold. Otherwise, it is a fundamental mistake to try and buy stocks when they are trading below 30.9, because the sell-off technically is not done while they are trading below 30.9. Now, this is the daily for the S&P 500. We can also see that the market did drop below 30.9 on the 4 hourly. This is a couple of days ago. And as long as the market is holding below 30.9, it is a fundamental error to try and buy instruments thinking that they are just about to bounce. So if you understand this fundamental understanding of the stock market, you definitely not be looking for areas to enter any instrument right now because of where the RSI is trading. Furthermore, as long as the VIX is moving above the opposite, which is 69.1, then you have to give the benefit of the doubt in terms of allowing the market to continue dropping. In other words, it is only when the VIX finally comes off this level that the general market will have any opportunity of staging any type of sustained move in terms of a recovery bounce. And by the way, if you're new to this concept, these are my own original researched numbers, and RSI 30.9 has an opposite, which is 69.1. These levels are critical in understanding momentum. In other words, anything below RSI 30.9 is showing and is going to demonstrate downside strong momentum, while any instrument holding above 69.1 is going to demonstrate strong upside bullish momentum. And guys, honestly, if you don't understand these basics, the market will not make all that much sense. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings.